I'm Michael Obucina, Head of Education at Robinhood, and today I'm answering your questions about prediction markets. This is Robinhood Answers. Prediction markets allow you to express a view on whether a specific event will occur using event contracts. Each event trades on an open market and is built around a specific question with two possible answers, yes or no. The contract trades between $0 and $1 per contract. That price can be interpreted as the market's implied probability that the event will or won't occur. In other words, prediction markets translate uncertainty into a tradable price. After the event is resolved, the contract settles at $1 if the defined outcome occurred, or $0 if it didn't. To get started, open the app, tap the search icon, and type prediction markets. Once you're on the prediction market hub, select any event, and when you tap on a yes or no on a contract, you'll be prompted to apply for a Robinhood derivatives account. Keep in mind, event contracts aren't available in every state, and eligibility requirements apply. To access the prediction markets hub, navigate below and tap prediction markets. Here you can access featured events, view your open positions, discover newly listed events, as well as explore a dedicated sports section. Below all of that, you can see your trade history. Also notice at the top of the screen, you'll see a carousel of categories listed alphabetically. So tapping into a category shows more specific grouping within it. For example, let's say we tap on entertainment, and here we'll see subcategories like movies, music, TV, and others. You may also see contracts surface contextually throughout the app. Notice below the market data, we have a little section for economic events. These placements are designed to surface relevant contracts alongside other market information, which can be helpful as you make your normal investing and trading decisions. Imagine we want to trade the Fed meeting in June. Let's focus on the Fed maintains rate contract. Notice as I tap that, you'll see the yes and no buttons at the bottom of the screen appear. Currently, the yes is trading for 53 cents, the no is trading for 49 cents. That means the market is pricing in roughly a 53% chance that the Fed will keep rates unchanged in June. Meanwhile, the lower price contracts, like those trading for 3 cents and 1 cent, that's telling us that pretty much a rate hike for June is off the table. Of course, that can change over time leading up to the event. Let's buy an event contract. For this example, let's imagine we think Bitcoin will get above 100,000 before the end of 2026. To start, we'll tap that contract, and we'll see down at the bottom of our screen that the yes is currently trading for 41 cents, and the no is trading for 65 cents. Now to queue up our order, we're gonna tap yes. Remember, the quoted price is per contract. So one contract will cost 41 cents, 10 contracts will cost $4.10, and so on. Next, let's enter our desired price. You can see the current bid-ask spread is 35-cent bid, and the ask price is 41 cents, which is about a 6-cent wide market. So in this instant, we might want to consider placing an order closer to the midpoint of that market. To do so, we're going to tap the arrow again in the upper right-hand corner, and under conditional, tap limit order. And here we can now put in our own price on the trade. Remember, event contracts use limit-based orders. That means you're specifying the price you're willing to pay, and the order will only execute if the market can match you at that price. Because these contracts trade on open exchanges, every transaction requires another participant willing to take the other side of your trade. No one's willing to do that, your order simply won't execute. As a result, orders can be filled, partially filled, canceled, or even rejected depending on market conditions. For this example though, let's try to be a little greedy. We're going to trade closer to that bid price at 35 cents. And then lastly, notice that the app is calculating our estimated cost. You'll see the payout if we're correct. So in this case, if Bitcoin gets above 100,000 before year end, our contracts will each settle at $1 for a total payout of 100. Net, that's roughly a $65 profit, not including the commission we paid. Now, if we're wrong and the contract settle at $0, we'll lose the entire amount we paid. So before placing a trade, it is worth reviewing the actual information on the details page, specifically the timeline, the description, and the terms. Notice for this contract in particular, the timeline. Even if Bitcoin got above 100,000 tomorrow, say, the contract doesn't settle and pay out until December 31st of 2026. That means you could wait all of that time to get your final payout, unless, of course, you decide to close the position earlier in the market. And last but not least, and this is for all contracts really, understand how the outcome is defined and which official data source determines settlement and how edge cases are handled. And you can do that by looking at the About section and tapping on the contract term and conditions. Once you're ready to place the order, tap Review, give one last look at your order summary, make sure all the details are correct, and when you're ready, swipe up to Submit. Our order's been sent, but we haven't been filled yet, because remember, we're working in order to buy these at 35 cents, and that is pending. Tap Done, and if we go back to the Event Details page under Upcoming Activity, you can see our order sitting there, and if we tap into that, we get our order details, and maybe if you change your mind, you want to cancel the order, just tap Cancel Order, and now we're out. We haven't been filled, and our order has been canceled. Let's imagine we wanted to buy the yes on Rory McIlroy to win the Masters. The contract is currently trading for 11 cents, and let's imagine we wanted to buy 1,000 of these contracts. If Rory wins, each of these contracts settle at $1, so the total payout would be $1,000. However, and this is important, that payout isn't our profit. While we would receive $1,000 in settlement, we're paying $110 to enter the position, not including commissions. So doing the math, our potential profit would be $890, not including the commissions. It's also worth noting that these are not leveraged products, so you put up the full amount of the trade up front, and that amount represents your maximum potential loss. So if Rory doesn't win the Masters, these contracts will settle at 0, and we will lose the $110 we paid to enter the position, plus the commissions we paid. The short answer is yes, you can close your positions before settlement. To do so, navigate to the Prediction Market section, tap the open position and select Close. Enter the amount of contracts and the desired price, review the order, and swipe up when you're ready to submit. To calculate your potential profit, simply compare the entry price to the exit price. In this example, we bought these at 11 cents. So if we sell them at 75, that's a 64 cent per contract gain, for a total profit of $640, not including commissions. On the other hand, let's say the position moved against us and the contract drops to 5 cents. We can try to close the position to limit our losses. In that case, if we sell at 5, we would be taking a 6 cent loss per contract, or $60 total. And this is one of the key advantages of trading prediction markets. You don't have to wait until settlement to realize gains or take losses. Let's look at a college basketball game between Rhode Island and St. Bonaventure. And this game's currently live. We can see on our screen, there's the game. Let's tap into the event. There's currently about 7 minutes left in the first half. St. Bonaventure is leading 23-21. Notice how the prices and probabilities in the chart are updating in real time as traders come in and out of this market. Below that, we see the contract table. And at the most basic level, we can trade the winner of this game. Right now, St. Bonaventure has about a 62% chance of winning. Meanwhile, Rhode Island, 39%. As you tap these, notice a drawer opens up at the bottom of our screen where we can choose to either trade the yes or no contract for a given team. As we do that, the probabilities and prices will update as well. Let's imagine we wanted to buy St. Bonaventure here at 64 cents. We tap Buy. It brings us to our order ticket where we can submit our order and place our trade. Now, if we want to trade the game spread instead of the outright winner, simply tap one of the pills under the spread column. In this example, St. Bonaventure at minus 2.5 means that they must win by more than that amount for the contract to pay out. Plus 2.5 means that Rhode Island is effectively getting those points added to its final score. Next to the spread is the totals column. Here you can trade the total combined score of both teams. Trading the over means you think the combined score of this game will exceed 144.5 points. Trading the under means you don't think it will get that high and the score will end up below 144.5. Combos allow you to combine two or more selections into a single contract. Imagine we think Philly will cover the spread and the game total will exceed the over. To build that combo, simply tap each of those selections and you'll notice that a custom combo is showing up at the bottom of our screen. Right now the market is pricing that at 27 cents, but that market will continue to price that dynamically as the odds change. Here you can see we're getting a new price and now it's trading at 26.9 cents. If we want to buy that, tap buy, enter the dollar amount that you want to place on that trade. The app will calculate the potential payout, and when you're ready, hit review and swipe up to submit. Navigate below contracts and you'll see a table for player performance. We can trade how many points someone will score, 3-pointers, rebounds, assists, and to build a custom combo, it's the same process. Tap the pills that you want to add to the custom combo, and from there, you can see we have a 3-leg combo built. Wiggins scoring 10 or more points, Powell 2 or more threes, and Embiid 4 or more rebounds. The app will dynamically price that combo, and same process. Put the amount of money that you want to put on that trade. The app will tell you the payout, hit review, and if you want to place the trade, review the order summary, and swipe up to submit. Event contracts have defined risk, but defined risk doesn't mean low risk. If a contract settles at 0, the entire amount allocated to that trade is lost. Before placing a trade, ask yourself, if this settles at 0, how much would I lose? And most importantly, are you comfortable with that outcome? Event contracts resolve based on very specific language, timelines, official data sources. Edge cases and non-standard outcomes often occur, and they're governed by the contract's terms, so reviewing those details before trading is essential. Don't forget, each event trades differently. Liquidity can vary, orders may not fill exactly as expected, settlement timing may differ from the actual event date, and market prices reflect collective expectations and aren't guarantees that an event will or won't happen. And finally, while event contracts can complement other strategies, they aren't designed to replace long-term diversified investing. Like any financial product, they require thoughtful risk management and a clear understanding of what you're trading. Taking the time to understand the mechanics and the fine print can make all the difference. Thanks for watching. Don't forget to like, subscribe, and hit that bell so you're notified whenever we post new content. If you have more questions, check out the Robinhood Help Center or reach out to our customer support teams. We're here to help. To learn more about prediction markets and event contracts, head over to Robinhood Learn at learn.robinhood.com. This was Robinhood Answers. I'm Michael Obucina. See you next time.